Welcome to the journey of one of America's most successful entrepreneurs, Mark Cuban. Born in Pittsburgh, Pennsylvania, Cuban's entrepreneurial spirit was ignited at a young age when he sold garbage bags to earn money for his favorite basketball shoes. This passion for business only grew stronger, leading him to build a multi-billion-dollar empire. His early career was marked by a series of strategic investments and innovative business ventures, including the sale of his startup, MicroSolutions, and the creation of Broadcast.com, which was sold to Yahoo for an astounding $5.7 billion. Today, Cuban stands tall as a titan of industry, the proud owner of the Dallas Mavericks, and a beloved shark on the hit show Shark Tank. His journey is a testament to the power of hard work, innovation, and tenacity. This self-made billionaire, with his relentless drive and innovative mindset, has many lessons to impart, particularly about wealth-building strategies. Imagine if Mark Cuban were 30 again. What wealth strategies would he employ to replicate his success? We're talking about a man who built his fortune from nothing, a man who challenged the status quo and dared to dream big. If Mark Cuban were transported back to his 30s, with all the knowledge and experience he has now, how would he go about it? Would he follow the same path, or would he take a different route? Perhaps he'd start another tech company, or maybe he'd venture into new territory like biotech or renewable energy. He might even take a stab at cryptocurrency. It's fascinating to speculate about the potential avenues he could explore. You see, the beauty of Mark Cuban's approach to wealth creation is that it's not limited to one industry or one type of investment. It's a mindset, a way of thinking that's adaptable, flexible, and forward-looking. Let's dive into these strategies and see how they can help young entrepreneurs today. First and foremost, Mark Cuban would not shy away from risk. Think about it. Would a man who sold his company, MicroSolutions, for $6 million, only to risk it all again on another venture, be the epitome of caution? Not a chance. Mark Cuban has always been a risk taker, a trait that has played a key role in his journey towards becoming a self-made billionaire. In the early days, Cuban started a bar while still in college. Despite having no prior experience in the hospitality industry, he took the plunge. Yes, the venture eventually failed, but it taught him valuable lessons about business and management. Then came MicroSolutions, a software reseller and system integrator company. Again, it was a risk. Technology was still a burgeoning field in the 80s, and Cuban was betting on its future. The risk paid off when he sold the company for a whopping $6 million. But did he stop there? No. He embraced risk yet again with Broadcast.com, an internet radio company. In the late 90s, internet businesses were still a new concept, and investing in them was considered risky. But Cuban saw the potential and took the leap. The result? Yahoo bought Broadcast.com for nearly $6 billion. These examples illustrate that Cuban's wealth-building strategy has always involved taking calculated risks. He saw opportunities where others saw uncertainty. He ventured into uncharted territories, not recklessly, but with a clear vision and a willingness to face the challenges head-on. The point here isn't to glorify risk for risk's sake. Instead, it's about understanding that risk, when carefully evaluated and calculated, can lead to significant rewards. It's about having the courage to step out of your comfort zone, to see the potential in the new and unfamiliar, and to take action, even when the outcome is uncertain. The road to success is paved with risks. Without it, Mark Cuban wouldn't be where he is today. So, like Cuban, don't shy away from risk. Embrace it, because that's where the magic happens. Another strategy that Mark Cuban would likely employ is diversification. Imagine you're hosting a party and you've only stocked up on pineapple pizza. Some guests may love it, but others may detest it. The chances are you'll end up with a lot of leftover pizzas. Now, imagine if you diversified your menu, offering a variety of pizzas. You'd probably have fewer leftovers and happier guests. That's the basic principle of diversification in investments. Diversification is essentially about not putting all your financial eggs in one basket. In the investment world, it's a risk management strategy that mixes a wide variety of investments within a portfolio. The rationale behind this technique is that a diversified portfolio can, on average, yield higher returns and pose a lower risk than any individual investment found within the portfolio. So, how does Mark Cuban diversify his wealth? Well, He's got his fingers in many pies. He's taken his earnings from the sale of broadcast.com and invested them across various industries and assets. He owns the Dallas Mavericks. He's invested in dozens of startups through Shark Tank. And he's got his own media production company, 2929 Entertainment. He's also invested in real estate and a host of other ventures. Diversification doesn't mean simply throwing money at different industries. It's about understanding those industries, knowing the risks, and being comfortable with the idea that some investments may fail. It's about balancing those potential failures with investments in other sectors that are performing well. It's not about guaranteeing gains, but about safeguarding against catastrophic losses. Remember, diversification isn't a one-size-fits-all strategy. What works for Mark Cuban may not work for everyone. It's important to consider your own financial goals, risk tolerance, and investment horizon. Diversification should align with these factors. Diversification, then, is another cornerstone of Mark Cuban's wealth-building strategy. It's not just about spreading the risk, but also about seizing opportunities in different sectors. Because in the end, it's all about maximizing returns while minimizing risk. Mark Cuban, if he were 30 again, would undoubtedly continue to prioritize learning. You see, one of the key factors behind Mark's remarkable success is his love for learning. It's not just about gathering facts or memorizing data. It's about embracing a mindset of curiosity and continuous growth. Mark is a firm believer in the power of knowledge and its ability to open doors. He's the kind of person who devours books, not just for the pleasure of reading, but to absorb new ideas, perspectives, and insights. This habit of reading is not mere pastime. Rather, it's a strategic tool, a way to stay ahead of the curve, to stay informed and updated about the ever-evolving trends in the business world. This commitment to learning has been instrumental in his journey. It's helped him identify opportunities, make informed decisions, and anticipate changes in the marketplace. It's given him the ability to adapt, to pivot when necessary, and to stay resilient in the face of challenges. For Mark, learning is not confined to a classroom or a specific period in life. It's a lifelong pursuit. It's about constantly seeking out new knowledge, upgrading skills, and staying adaptable in an ever-changing world. He recognizes that in the world of business, the only constant is change. And to navigate through this change, one needs to be armed with knowledge, fresh insights, and a willingness to learn. Mark's strategy of lifelong learning is not just about personal growth. It's also about contributing to the world around him. By constantly learning and growing, he's able to bring fresh ideas to the table, challenge the status quo, and drive innovation. So if Mark Cuban were 30 again, he would undoubtedly continue on this path of learning. He would continue to read, to seek out new knowledge, to stay curious and adaptable. He would continue to use learning as a strategic tool to navigate the business landscape. With a mindset focused on learning, Mark Cuban would be well equipped to navigate the ever-changing business landscape. To recap, if Mark Cuban were 30 again, he would embrace risk, diversify his investments, and focus on lifelong learning. Let's delve a little deeper into these three cornerstones of wealth building. Risk-taking, first and foremost, is not about recklessness. It's about calculated decisions. It's about stepping out of your comfort zone to seize opportunities that could yield high rewards. If you remember, Mark Cuban believes that the riskiest thing you can do is avoid risk. He didn't become a billionaire by playing it safe, but by taking bold steps and making audacious moves. Secondly, we have diversification. It's the strategy of not putting all your eggs in one basket. This means investing in a wide variety of assets such as stocks, bonds, real estate, and even startups. The goal is to spread potential risks and increase the possibility of gaining from different sectors. Diversification, as Mark Cuban would attest to, is a safety net that can help protect your wealth from market fluctuations. Lastly, there's lifelong learning. Mark Cuban is a firm believer in constantly updating his knowledge and skills. He reads extensively and is always up to date with the latest trends and technologies. This continual learning process is key to spotting new opportunities and staying ahead of the curve. It's not just about amassing wealth, but about staying wealthy. Each of these strategies is powerful on its own, but when combined, they form a potent wealth-building formula. Embracing risk allows you to seize opportunities, diversification protects your assets, and lifelong learning keeps you ahead in the game. It's important to note, however, that these strategies aren't a magic bullet. They require discipline, foresight, and a willingness to learn from failures. These strategies, employed by Mark Cuban, are not only for those aiming to become billionaires, but are valuable lessons for anyone seeking to build wealth. So, whether you're an ambitious entrepreneur or someone simply looking to secure a financially stable future, these strategies could be your roadmap to success.